Hey team, our next analysis is on pound Kiwi, starting on the monthly as usual. We identified our monthly upper and our monthly lower zone by looking for horizontal buy and sell sensitivity. Now, as you guys know, our yellow zones are our weekly zones, and I wanted to show you our weekly zones on the monthly time frame so that you can see that price action is showing bearish sensitivity. We see a break of this weekly lower zone to the downside. We see an exhaustion with a lot of sell pressure. So this tells me, when we talk about flow, that price is definitely going to make its way to its monthly lower zone to test the buy pressure at our monthly lower zone. So now let's take it down to the weekly for a closer look. All right, on to the weekly. Here's our weekly upper and our weekly lower zone that you saw on the monthly time frame. Now, this is important. Why? Because we see price break below our weekly lower zone to the downside. That's a push. What's after a push to the downside? An exhaustion. And what do we see at exhaustion? We see a ton of sell pressure hit the market with the strong pin bar. This is telling me that we're likely going to see continuational push to our monthly lower zone. So now let's take it to the daily for a closer look. Actually, before we take it to the daily, I just want to show you this push and exhaustion one more time. Push to the downside. Why is this a push? Because it broke area sensitivity. After a push to the downside, we get an exhaustion to the upside. And again, guys, look at this pin bar, okay? Buyers and sellers are having a strong battle right now because sellers want a continuational push to the downside. Buyers want price to break above and likely make another push to its weekly upper zone. But this is definitely a seller's market because price is now trading below this weekly lower zone. We definitely know that this is not a stop hunt because of the sell pressure at completion of exhaustion, telling me that we have a high probability short to our monthly lower zone. So we need to start looking for an entry to the downside to capitalize on that continuational push. All right, down to the daily, what are we looking at here? Again, push to the downside, exhaustion. We're looking to capitalize on a continuational push to the downside. We see higher lows, so we need to identify an uptrend, and now we need to look for entry. All right, taking it down to the 4H. Here's that push, here's that exhaustion. Again, we're looking for that continuational push to the downside. Here's a perfect example of a stop hunt and why breakout traders never succeed, okay? Here we see a strong bullish engulfing candle close to the upside, breaking above our weekly lower zone to the upside, okay? This is where breakout traders will then place long entries, okay? A lot of amateur traders will then place entries to the upside, but what happens? They grabbed all the orders, they sent price back down to the downside. This is called a lower time frame stop hunt, which on the higher time frames looks like a pin bar. Okay, pound Kiwi, entry to the downside, okay? So we see our lower time frame uptrend, okay? We see price break this uptrend to the downside. Due to the break to the downside, this is considered a push. Here we see an exhaustion to the upside because after a push to the downside, we do have an exhaustion to the upside. But what I do notice here is that there was a level of buy pressure at the completion of this push. So to be safe, because your job as a professional trader or someone who wants to be a professional trader is not only to find the proper analysis, but to find the highest probability entry. So here's our last level of buy sensitivity until our lower monthly zone. So what I'm going to be waiting for is I'm going to stay patient. I'm waiting for price to break its previous low to the downside, area sensitivity to the downside. That's a push. We wait for a minor exhaustion and price action confirmation to the downside. That would be a bearish engulfing candle close. So one more time for a quick summary. Push, exhaustion. Due to the buy pressure, we stay patient. We wait for price to break previous low with the push, minor exhaustion, bearish engulfing candle. We enter short to our lower monthly zone. What would make this trade invalid? Very simple. Again, here's that push, here's exhaustion. If we fail to see the sell pressure to break previous low to the downside, meaning that there's buy pressure keeping price to the upside, well, this trade becomes invalid. Price must break below previous low for us to place an entry to our lower monthly zone. So that's it for pound Kiwi, and on to the next. Actually, guys, this is a pound pair, lower risk, okay? So any pound entry, my entry goes from about 1.5% risk to about 1% risk on any pound entry.